the way things are looking, it looks pretty good. Dhiraj Agarwal is with us, Managing Director at Ambit Investment Managers. Dhiraj, great to have you with us here on the show. Appreciate it. Thank you for your time. Prashant this side. Sort of Upmove stretches on, keeps extending. And although we've, on an absolute basis, I mean, you gave up some after the election results and you basically back above the earlier highs. So that's what you've done. What's your sense from here, Dhiraj? All calls for caution, sideways move, consolidation. I mean, you get those, but for very brief periods. What are you and your team thinking about markets, at least in the very near term?
So, well, the markets are going up, but as you rightly pointed out, it goes down and then comes up a little bit. And most importantly, the pace of the up move is now beginning to slow down slightly, right? So I just heard the comment that you made just before I joined that last time we saw 12 consecutive up days was in 1993. So that's a long time ago. And if you get a 13th day today, it's an all-time record. But it's a very slow up move. I mean, every day is up move. While it looks good, it's like either 0.25% or 30 basis points or 35 basis points. So from that point of view, it's making new highs, but it's not a runaway market. And that is also getting manifested in the fact that I think the markets are beginning to become a little bit more selective in what's going up and what's not going up. It's not like everything is getting lifted at the same time. I'm sensing a much larger dispersion in stock price performances within the sectors and across the sectors, and quality bias coming up. We are seeing that within our asset management products, which are all tilted towards quality bias. They've started to do very well in the last 3 months. So the whole quality bias is shifting back to the market, which means it might not be that easy to just pick up anything which is tipped or recommendation or which just flashes on a screen and make money anymore.
Okay, that's advice worth keeping in mind. Dhiraj, great to have you on the show today. So tell us, are there any changes in the portfolio that you've been looking at? Maybe any trimming, any profit taking? And since you're saying the bias is now moving back towards quality, what would that mean? What would you advise? I mean, does that mean back towards, let's say, some of the staples, even if growth numbers don't look as glamorous?
So, it's not just for the sectors, it's across sectors, right? So I think the whole focus in the market for the last few months or till, let's say, 2 or 3 months ago was more on narratives and less on numbers. If numbers came through, it was outstanding, it was the icing on the cake, but narratives were enough to take the stock prices up. I think people are now beginning to look through the narratives a little bit and say, hey, where are the numbers? Is this a nice sounding story or commentary actually getting followed through in numbers as well? And I think it's a healthy sign because this will start separating the weak from the strong. This will start actually bringing back the more fundamental orientation of the market. So, you mentioned FMCG. Yes, there are some green shoots, signs of green shoots within the FMCG sector. So when I meant quality, I didn't mean the classic definition of quality, that quality is equal to buy FMCG. What I meant was numbers have to come through. People are becoming a lot more fundamentals focused right now rather than momentum focused.
Hi Dhiraj, good morning, good to see you. And well, we have some numbers as well that are flashing on the screen. Bajaj Auto's numbers actually look better than what we were working with. Mahindra and Mahindra as well, those numbers look good. So both those two updates that came in earlier today was good. How are you approaching the auto space, Dhiraj? I think last time around you were hinting that Maruti is something that you were still positive on. How are you positioned now?
Yeah, no, I think if I remember right, I probably mentioned the opposite, that I see in four-wheelers, inventory is beginning to pile up. Maruti is probably one of the names where the inventory is beginning to pile up. Two-wheelers relatively are still looking better, as you can see in all the numbers which are coming through the monthly volume numbers right now. So there are, like in every other sector or most sectors, I see pockets of dispersion within auto at this point of time. CVs are slightly weak. Passenger vehicles are beginning to show signs of weakness. Two-wheelers are by and large still doing okay. And within two-wheelers, obviously, their market share shifts. So one has to be a little bit more careful at this point of time, I think, rather than take broad brush calls.
On that point on caution in CVs, Dhiraj, I mean, I've been watching that number for many months, right? While we talk about the economy doing well, and if you look at, any of the other high-frequency indicators, look at GST collections, or even look at GDP internals, it doesn't look so bad. But then the CV numbers, month after month, quarter after quarter, they're just failing to inspire, no matter which company you're looking at. Even Mahindra, when you look at the CV performance, weak. Ashok Leyland, weak. Eicher Motors, commercial vehicles, weak. So what do you think is at play here?
So CVs typically follow, like most things, it follows a cycle. So it goes through 2 to 3 years of strong upcycle where excess capacity is built. And then even if the economy continues to do well, that excess capacity takes some time to get absorbed. So if the economy continues to do well, the absorption phase should not last more than 12 or 18 months. And if the economy weakens, then the historic cycle suggests that it could last even 2 to 3 years. So we always see that when the freight load-bearing capacity goes into a bit of a tight supply or deficit, then there is a sharp buildup in the capacity. So most of the large fleet operators, instead of buying 1 or 2 trucks, will probably buy 10. I'm just thinking or nuancing it. And hence, very quickly overcapacity comes into the system. So, I mean, tractors and CVs almost follow a clockwork kind of a cycle. So after every 2.5, 3 years of upcycle, we do get at least one soft year.
And where do you think we are in that cycle? Are we anywhere close to the bottom, or is this going to last, since this is a cyclical slowdown?
I think there are a few more quarters to go, perhaps.
Okay.
All right, we'll leave it there. Thank you very much for joining us. Dhiraj, appreciate you taking the time being with us here on CNBC TV18. So that is some perspective coming through on markets as they stand right now.